Good morning, Bitcoiners. Hello, and welcome back to another edition of your Bitcoin Economic Calendar. I'm Mauricio Di Ortolomeo, co-founder and chief strategy officer here at Ledn. And as always, we bring you the news and analysis you need to start the week off right in Bitcoin. Today is Tuesday, August 1st, and we have a wonderful episode for you as always. In today's issue, we're going to talk about the aftermath of the Fed's interest rate decision. We saw markets rallied last week, and we're going to chat a little bit about what we could expect for markets in the near term on the back of that decision. We're also going to talk about potential near-term catalysts for Bitcoin in the week ahead. We have earnings from Microstrategies, PayPal, Robinhood, Block, and more. And last but not least, we're going to close on a few words on property rights in Latin America and how Bitcoin comes into the picture. So grab your coffees, everyone. It's going to be a great one. And starting as we usually do with Bitcoin, we see that both Bitcoin and equity markets rallied last week in the aftermath of the Fed's 75 basis points interest rate hike last Wednesday. Now, as we mentioned last Tuesday, last week's issue, the market got all of the clues that it was looking for to find some relief and move higher. The Fed signaled that it is not looking to shock the markets higher or further, and said that future rate increases would be more gradual and determined by economic data. In short, it signaled that it will stop hiking aggressively for now. At least that is how markets are interpreting the outcome of Wednesday's meeting. And again, we see not just Bitcoin, but equities in general had a great week last week. The S&P 500 was up 4.29% more than Bitcoin. And again, we see broadly Bitcoin, equities, and even gold in the green on the back of the decision and the weaker dollar. We'll get into those in a little bit. So again, the Fed's decision to raise by 75 basis points and signal that it'll move to a more gradual further interest rate hikes was enough to make the interest rates on the 5-year and 10-year notes drop, which again lowered the real return of the US dollar. Here we see the candle from last week. This is the yield on the 10-year note, and we see that it dropped significantly, down 5.14%. The 5-year note saw a similar move, and even then so did the 2-year. So again, all of this combined to drop the real return of the US dollar. Again, the real return is the yield on bonds minus inflation. If inflation stays still and the yield on these bonds drops, that lowers the real return of the US dollar, which means weakness for the US dollar. This is actually, I was supposed to mention this at the beginning of the episode, but now that we're here, I'll mention this now. We did announce last week, we sent out the emails that the interest rates as of August 1st for our savings accounts were going to remain the same. Balances up to 0.1 Bitcoin will earn 5.25 BTC. Balances above 0.1 Bitcoin will earn 2% APY. And on our USDC savings accounts, all balances will earn 7.5% APY. So again, rates remain unchanged as of August 1st here at Ledn. Back to the analysis, and apologies for that switch in the order. This was the chart that I was looking for, actually, to make reference to the drop in the bond yields and the lower real return on the US dollar. So as we can see here, this chart shows both the yield on the three of the main bonds out of the US Treasury, the 2-year, the 5-year, and the 10-year. Those are teal, blue, and black, respectively. And as you can see, they've all moved in tandem. So they've all dropped quite significantly over the last little bit. And as the US dollar weakened, equity markets and Bitcoin got a tailwind and were able to move higher. Now, as we've also covered here, Bitcoin prices are closely related to the size or the expansion of the monetary supply. And as we can see here from this chart shared by Lynn Alden last week, she pointed out from the chart above that, as you can see here, this red line here at the top right of the chart means that the monetary base has remained flat for the last little bit. Essentially, it's been flat year to date. It has not increased year to date. And she notes that this has been the longest period of non-growth for the monetary base since the mid-2009s and the mid-2003s. Now, while growth on the monetary base is being held in check for now, the long-term trend as per the chart is very clear. And so all this to say that it seems like the US is being pretty diligent in not expanding its monetary base so far into the year. And that, of course, has impacted Bitcoin and has impacted Bitcoin prices and other assets. But the interesting thing to point from the chart is that the trend is very clear. And so the reasons are still unclear as to why the expansion of the monetary base will have to happen again. But regardless, it seems to historically continue to happen and find a reason to continue growing. So that's what the market is essentially on the lookout for. When will the Fed continue expanding, or what will be the event that'll lead to this? We'll continue, of course, to monitor the size of the monetary base, and any changes here will be quickly reflected in the price of Bitcoin, and we'll report, of course. Now, another development that has made waves in the crypto space is the fact that Ethereum options, the open interest for Ethereum option contracts has surpassed the open interest for Bitcoin option contracts for the first time ever. And as pointed out by this article here from Fortune. Now, the hype around Ethereum options comes in anticipation of the merge to proof of stake, the new consensus algorithm that the protocol is migrating into. Now, this is expected to happen in September, so a month from now. And we will be covering this more at length in our DeFi section in today's blog issue. So click on the video description to get to our blog, and you'll see our full out DeFi analysis included in there. Now, moving over to some Bitcoin fundamentals and the derivative markets, let's first take a look at the funding rates for Bitcoin perpetual swaps. And for this, we're just going to pop up skew on the funding chart. 1 second. So here you can see the funding chart for Bitcoin perpetual futures. And as you can see from the chart, the funding rate can be a great sign of investor sentiment around Bitcoin. Currently, we can see that we find ourselves here, if you look at the far end of this curve, it's been essentially marked by a prolonged period of shading into the negative. So we've been essentially in a negative funding rate regime for the last little bit. What this means is that there have been more short investors than long investors on these contracts. And they are actually paying to be short, meaning that they are not doing the carry trade where an investor would buy spot and short the perpetual futures because they would get paid by shorting that perpetual future. These are people that are actually paying to be short. So they are either trying to hedge their downside from a long position and they're paying to do so, or they're actually paying to have some short exposure to Bitcoin. So again, investors are paying for downside protection on this perpetual swap markets, which is pretty interesting because we see that Bitcoin has rallied in the face of this sort of negative funding rate regime. Now, also of interest and to note is that the units of GBTC, the Bitcoin fund that is hoping to be an ETF, and let me just make this chart a little bit smaller so it fits better on the screen. As you can see here, last week, the shares of GBTC reached a record new discount, down 35% from its net asset value. Now, again, you may wonder, wow, 35% discount is pretty steep. But if we look at what the record premiums were for this fund, it once traded at over 100% premium to the net asset value of the shares themselves. So there is no real limit as to how far it could go on percentage terms. But again, this just shows that investors could be looking to rotate their holdings away from GBTC into other ETF offerings, as there seems to be some significant amount of GBTC units that are being subject to this three arrows bankruptcy/liquidation process. So investors might be looking to hedge some volatility on that front and transition to an ETF that may not be tangled in some of these legal proceedings. Now, in terms of catalysts for the week ahead in Bitcoin, we have some relevant corporate earnings from Microstrategy, PayPal, Block, and Robinhood this week. We're going to detail the dates and times of all of these in our What's Ahead section. And of course, we saw what happened after the Tesla earnings. So this is why it is important to pay attention to corporate reports that have some Bitcoin element to them. And in the case of these four companies, there's very much a very real Bitcoin component to them. Now, to wrap up this section today, let's check in on Nigeria and Argentina this week. In both places, the headlines have been what you would expect. The dollar has continued to soar versus their local currencies. So let's look at Nigeria for a second. In Nigeria, the Naira has reached a new low in the free market, which governments like to call the black market. But in fact, this is the only real market in which two willing people can transact freely. And again, we see here how Bloomberg reports Nigerians are piling into crypto due to low confidence in Naira, and the Naira rates are dropping or sinking to new lows. Consistently, we see here Nairametrics, this is just a local publication, that again reports that Nigerians are running to crypto amid a falling Naira. Bitcoin peer-to-peer trading volumes surge 258% in 7 days. So again, par for the course as far as what we would expect to see out of Nigeria so far. Checking in on Argentina, we see that this piece here from Al Jazeera from last week, again, just continues to cover the fact that inflation is skyrocketing. The latest numbers out of Argentina for July were published, and I believe the government reports that inflation, the official inflation numbers were stated at 64% annualized inflation for the month of July. This makes Argentina the highest inflation in Latin America, of course, second to our very own Venezuela, unfortunately. But again, not surprising. Also not surprising is the fact that we saw some news out of Argentina that are starting to impact Bitcoin and crypto users. Last week, the central bank published a restriction that prohibits those who have purchased Bitcoin or cryptocurrency from purchasing dollars at the official rate from the government, basically the handout rate, the artificially fixed cheap dollars. They will not sell them to you now if you have interacted with Bitcoin or cryptocurrencies. Now, the government of Argentina already shut the door for Argentinians to protect their savings, and now it's going after the small windows and cracks. In my lifetime, these types of restrictions don't stop until there typically is a change in government. So best of luck to all of our friends in Argentina and Nigeria. Continue to protect yourselves and your savings. And as always, we wrap up with what's ahead for the week. In today's What's Ahead for the week section, we wanted to share a few words on property rights in Latin America, and before we go into the details for the data for the week ahead. And for that, we want to speak briefly about what's happening in Chile. So in a bold and dangerous move, Chile is proposing to rewrite its constitution months after electing a populist leader. As a Venezuelan, I can't help but feel worried, as asking to rewrite the constitution shortly after an election is perhaps the single biggest red flag that I can remember from the Chavez era in Venezuela. As part of the new draft, the new constitution would allow the sitting president to get reelected consecutively, which was previously not allowed in Chile. This, among other changes in the lawmaking process, are the subtle changes that slowly turn a politician from a soft Democrat to a hard authoritarian. We're going to switch here for a second so that you can see some of the articles that we're about to reference in this section. So as things go in Latin America, the promises of equality, social and environmental justice will be too tempting for the populace not to pass into law. Hidden within the webs of the articles will be the complete restructuring of its institutions and the very pillars of its society. Most importantly, it literally resets the boundaries of what is possible for a brand new leader. He got to rewrite the rules that govern the entire country within a month of being in office. After the new constitution gets passed, that shows him that there is literally nothing that he cannot do. Now, the question is, where do we go from here? As we've covered extensively in this publication, the issue that we're witnessing here right now is not limited to Chile. This chart here that we're showing you right now essentially shows you that 80% of the world economy is experiencing inflation above 6%. This is the highest level of global countries experiencing this level of inflation since the 70s and the 80s. The following chart shows another interesting insight. In this chart, you see the distribution in the value of residential real estate relative to the size of each continent's population. Now, some might look at this chart and see over-financialization of assets in the Western world. I look at this chart and see the unequal distribution of property rights across the world. You see, a person currently in Chile, having seen what happened to large landowners, farmers, and landlords in Venezuela, would likely be looking to place its assets for sale locally and start looking for places to buy in Miami, as per the article that we covered a few weeks ago. Here we go. And this very much happened in Venezuela. Now, how does this impact crypto and Bitcoin markets? Let's transition this back. Not everyone in Chile will be able to afford a house or condo in Miami, let alone not even a ticket to go to Miami. For them, a practical option would be to protect their savings via stablecoins and to build a Bitcoin position in their portfolios such that they can earn interest from it or with it and borrow from it even, using services like the ones we offer here at Ledn. So this is very meaningful because as property rights get dismantled across the globe, the world will flock to the few places where these property rights are still protected. And personally, we believe that Bitcoin actually enforces property rights better than many governments around the world, if not all. And this will be a great source of refuge for many people looking precisely to protect their savings and to get some property rights from a place where there aren't any. Now, as we said, there are some main earnings this week that could impact Bitcoin, so let's go through them briefly. And it's a quiet week in terms of Fed speeches and economic data. So for this week, the earnings should take the spotlight, especially pertaining to Bitcoin. So today, Tuesday, end of day or in the evening, we get earnings from Microstrategy and PayPal. These are both companies that very much use Bitcoin and will very much be speaking or naming Bitcoin in their reports. Tomorrow, we get earnings from Robinhood. Again, this company has essentially pivoted from a options broker to now pretty much a crypto exchange. So their data will be insightful as well. And last but not least, Thursday, we get earnings from Block, which is Jack Dorsey's company. And of course, they're very intimately involved with Bitcoin and announced so many new initiatives over the last quarter. So it'll be very interesting to see what they have to say, not just about Bitcoin, but the economy in general. Friday, we get non-farm payrolls out of the US. This is important because we're starting to see potential cracks in the US labor markets, and this data might reaffirm that. And with that, we reach the end of today's show. If you enjoyed it, if you learned something, we welcome you to thumbs up, like it, subscribe to our channel, and share it with your friends. If you don't yet have a Ledn account, I welcome you to check out ledn.io and learn how you can start earning the best interest rates for your Bitcoin and USDC. And if you need cash and don't want to sell your Bitcoin, we have the best rates for Bitcoin-backed dollar loans. You can check them out in our B2X product as well. And if our most recent product lets you buy a house as big as your stack without having to sell your Bitcoin, it's the Bitcoin mortgage. So thank you, everybody. Have a wonderful week. If you have comments or questions, leave them below and see you next week.